Did you know there's a billionaire out there who once paid $0 in income tax, and legally? Yeah, not a glitch, not a loophole, just a really, really clever use of the system. Meanwhile, Bob, your friendly neighborhood barista, paid more in taxes than some people flying private jets. How is that even possible? Well, buckle up, because today we're diving into the strange, magical world of how the rich just don't pay taxes the way the rest of us do. Let's start with Bob. Bob earns $45,000 a year, making your oat milk lattes and occasionally judging your coffee order. Every 2 weeks, Bob's paycheck arrives, already lighter than it should be. Why? Because the government's already taken its share. Income tax, payroll tax, maybe even a bit of Social Security and Medicare. Before Bob even sees his money, it's sliced up like a pizza at a kid's party. Now meet Alice. Alice made millions last year. She owns 3 companies, drives a car that costs more than Bob's apartment, and somehow paid next to nothing in taxes. Not because she cheated, not because she has a shady accountant named Vito with offshore accounts, but because she knows the rules and plays the tax game like a pro. See, the rich don't earn money the same way Bob does. Bob trades time for a paycheck. That's called earned income, and it's taxed like it's being punished for existing. But Alice earns money from things like investments, stocks, real estate, and owning businesses. And those are taxed differently. Let's break that down. Imagine Bob gets $1,000 from working overtime. The government takes a chunk, say 20 to 30%, before Bob even sees it. But Alice? Let's say she made $1,000 from selling a stock she bought a year ago. She gets taxed at a capital gains rate, which, surprise, is usually lower than the rate for regular income, sometimes way lower. Now, here's the really fun part. What if Alice doesn't sell her stock at all? She bought it for $10, it's now worth $10 million, but she just keeps holding it. Guess what? No taxes, not a penny. Until she sells, it's like the money doesn't exist in the tax world. This is called unrealized gains. Alice can be paper rich and still owe $0 in taxes. But wait, you say. How does Alice live? How does she buy her 3rd vacation home or fund her private sushi chef? Good question. She borrows against her assets. Let's say she owns a bunch of Tesla stock. Instead of selling it and triggering taxes, she goes to the bank and says, "Hey, I've got all this valuable stock. Let me borrow a few million." The bank says, "Sure, you're rich, you're trustworthy, and worst case, we'll just take your stock." So now Alice has cash to spend without selling a thing. And here's the kicker. Loans aren't taxed. Let that sink in. Alice just accessed millions in spendable money without technically earning a dime. This is what's often called buy, borrow, die. You buy assets, you borrow money against them, and then you, well, eventually die. And when that happens, the tax code steps in with one last magic trick. It's called a step up in basis. Let's say Alice passes away and leaves her $10 million stock to her kids. When they inherit it, the value gets stepped up to what it's worth at that moment, not what Alice originally paid. So her kids could sell that stock immediately and pay $0 capital gains tax. Yep, the tax on those gains just disappears like your paycheck on rent day. And remember, all of this is perfectly legal. In fact, the system kind of expects the rich to do this. They're not breaking the rules, they're following them. But the rules weren't exactly written with Bob in mind. And here's where it gets even weirder. Bob can't do any of this. He can't borrow against his paycheck. He can't take out $1 million loan backed by his Spotify subscription and his half-used punch card from the sandwich shop. The system is built for people who already have assets, because once you're in the asset club, you can use them to make more money, skip taxes, and keep growing wealth like a snowball rolling downhill. And before you think, okay, but at some point the IRS must catch up, right? Not really. Let's say Alice does sell some of her stock and has to pay capital gains tax. Still, she's paying a lower rate than Bob. Plus, she's got an army of accountants who find deductions, credits, and losses to soften the blow. Like, did you know if Alice starts a business and it loses money, on paper, she can deduct that loss from her other income? That's right. Being bad at business can save her money. Meanwhile, if Bob's car breaks down on the way to work, that's just Bob's problem. And if Alice owns real estate, oh, it gets even more fun. Real estate investors get to use something called depreciation. It's basically the tax code pretending a building gets a little worse every year, even if it's actually going up in value, so Alice can deduct imaginary losses while still making real money. She's collecting rent, the property's appreciating, and she's telling the IRS, "Poor me, my asset's getting old and tired." And the IRS goes, "Aw, that sucks. Here's a tax break." And don't even get me started on trusts, shell companies, and offshore accounts. That's a whole other video. But let's pause for a second, because you might be thinking, wait, is this fair? That's the million-dollar question. The rich didn't necessarily write the tax code, but they sure had a loud voice in the room when it was being drafted. And the result is a system where working for a living, like Bob, is taxed hard and fast, but owning things, like Alice, is rewarded, protected, and even subsidized. It's not that the rich aren't paying any taxes, some do, but how they pay, when they pay, and how much they pay is often up to a very savvy game of chess, while Bob's stuck playing Uno with a half deck. And here's the wildest part. If Bob somehow manages to save up, invest, and build wealth, he can start using these strategies too. He can open a Roth IRA, invest in index funds, maybe buy property. The tax code isn't technically saying, this is only for the rich. It's just that the entry fee to play the smart tax game is money. And the less you have, the more you pay. It's kind of like flying. Everyone's going to the same place, but first class gets champagne and legroom, while Bob's in the back getting charged $12 for a granola bar. So, in conclusion, the reason the rich never seem to pay taxes like the rest of us is because the system lets them. They don't earn income, they own income. They don't sell, they borrow. And when they finally cash out, the code is full of soft landings. It's not magic. It's just math, money, and knowing which buttons to press. The takeaway? Taxes aren't just about how much money you make. They're about how you make it. And the game isn't rigged. It's just really, really good at rewarding people who already know how to play. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.